Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor. In today's edition of CEO and Market Expert Interviews, I'm joined by Peter Grandich, a market veteran and a known name in commodity investing. Peter, welcome to the show. It is great to have you.
My pleasure to be with you, sir.
Thanks. Peter, this is our first interview, and like I do with all my first-timers, I would like if you could give us your career breakdown, your background. Tell us, who is Peter Grandich? When did you start investing? Tell us more, please.
Sure. So I never intended to work on Wall Street. At age 23, got married in Ireland, and got a little diary from my father-in-law. Was working as a warehouse manager. The security guard was involved in Wall Street. He started to teach me about stocks. I started trading stock options and turned $7,000 into $100,000 in 9 months.
Nice.
But this was in the early 1980s. I got a call. We had prevalent in the U.S. back then what we call penny stock brokerages. And I got a call from one, and within 6 months, I lost the entire 100,000. So I should have known I was going to be in junior resource stocks, because I learned how to lose early on in my life. But that led to starting an investors club. I was discovered there. I became a stockbroker in '84. I wanted to quit because I couldn't cold call. There was no internet. You had to pick up a phone and call a stranger. And I didn't like doing that. But within 3 years, I was head of investment strategy for a New York Stock Exchange member firm and made a forecast of a crash. They wanted me to retract or to resign. I didn't. The crash came, the October 19th, 1987 one. And then the next day, I said the market would be back to new highs in 2 years. And because of that, and because I was not even a high school grad, I got a lot of media coverage and was actually given a name by a major network here in the U.S. called Good Morning America, the Wall Street Whiz Kid. And I milked it for the next 40 years. So I managed money. I managed some hedge funds, a mutual fund. And then in 1995, I thought I reached the American dream, wealth, and left the money management side and got very heavily involved in the metals market. But unfortunately, by 2000, gold crashed under $300, and I lost much of my wealth. I experienced the first of several battles of depression, and then I got back in the metals when gold went back above $300, which we thought was outstanding back then, and started also working with professional athletes from a money management side, and basically been in and around the metals and market industry for almost my entire career. And now it's down to just part of a planning group here in New Jersey, just for U.S. residents, financial planning. But I still dabble in the metals. And of course, this year, I managed to do something I never did before in my 40-year career. I managed to lose a ton of money in a horrible bear market. And so I finally did something that I had not done for the previous years. But here I am speaking to you.
All experience and nice background, full of experience, bad ones and good ones. Peter, let's start with the U.S. economy. I mean, we have a lot of factors here. Israel-Hamas war in Ukraine. We had Powell said on yesterday that they are still not sure that interest rates are high enough to finish the battle with inflation. What would you say about the health of U.S. economy at this moment?
Well, it would be judged by an action that I took back in 2021. It was at that point that I decided America had entered its worst ever social, political, and economic era. And it would rival and surpass anything it experienced beforehand, before it was all said and done. And because of that, for me anyway, outside of resource stocks, I didn't want to own any equities. And I did something very highly unusual. I also suggested not owning any bonds, which kind of goes against the grain, because that was always the safe place. But I really thought the days of 0 or 1% interest rate were going to be long gone. Bonds were going to have double-digit losses, and I acted accordingly. Nothing has changed to make that view better. In fact, most things have gotten worse. So my answer to you would be is that the number one problem that I resorted yesterday to make a personal plea to clients and friends is the absolute out of control now debt, which is growing such exponentially that the last bastion in the U.S. here of bipartisanship is something we call the Congressional Budget Office. It really is not one-sided in the sense that it's either Democrat or Republican influence. And earlier in the year, they had talked about our government debt reaching 50 trillion in 10 years. But because of the out of control deficit spending now, they have dropped it to as soon as 6 or 7 years. And this is really important for the common person to understand, let alone people that are investing. At $50 trillion and a 5% interest rate, which is not a very high interest rate historically, we'd be looking at $2.5 trillion in interest expense. The best we've ever had as a country was last year when we took in a little over 5 trillion. So within most of the people who are watching this life period, we're going to get to a point where we will no longer be able to function as we've been accustomed to, because the interest expense alone will overwhelm everything else. And we could talk about issues other than that for the next week and not cover them all. But that's, to me, the biggest single thing now that I think is petrifying. It literally has petrified me. And I don't have an answer that when people ask, well, how do we get out of it?
Yeah, I see your point. Does that mean that you see a bigger market correction or even wider meltdown in general markets over the period of, let's say, 12 months?
I don't know about meltdowns. I've not been in the crash camp, even though I don't want to see any real exposure to general equities. And the reason is that we have a generation of investment advisors who were born and learned to drive on a one-way street. And it's going to take a lot for them to finally capitulate and recognize that the days of printing money and Fed puts and all the other stuff that propelled the stock market up to its levels is gone. I don't think we're there yet. I think there's still enough of that, what I call the don't worry, be happy crowd that works on Wall Street. I do think an issue that is going to greatly impact that is that 65% of Americans are working paycheck to paycheck now. And they don't have any margin for additional cost and all. And yet all those things that they've grown accustomed to are rising. But even that group that's still doing okay, they gotten basically used to living a lifestyle between 1 to 2 levels higher than their finances. I see that not only when I worked with professional athletes that made tens of millions, but general working people. And people say, well, how do they do that? I say, well, just look at our last month's economic release here. Consumer spending was up 0.7%. Consumers' income, personal income, was up 0.3. You don't have to be a rocket scientist. If you're spending 7 and you're only making 3, where do you get the other 4 from? And we borrowed so much against our future, not only as a government, but as individual consumers. And so as people start to realize that that lifestyle can't be sustained because markets aren't going to go up 10, 20, 30% every year, and you're going to, keep making killings in markets and costs are going up, we're going to get more of a rollover and more of a market that just kind of goes sideways down with, some fairly decent bear market rallies. But personally, I don't believe, I'm 67. I hope to live still for quite a few years. I don't think that the stock market will make new all-time high in what's ever left of my life. I really think we're going to go into a period where at best it goes sideways, and at worst we have some double-digit losses.
Yeah, but what should a small man do right now? I mean, what is the safe haven here? Are physical precious metals good enough to hold through rough times, or there is more one should hold or invest? What's your take on this?
So I have to put my planning hat on as well and tell you that I adopted, even before I took this drastic position, a lifestyle for myself and advocated for almost half my career that less is more.
Mm-hmm.
It doesn't matter where you're from, whether you're from Croatia, the US, or Asia, families before us managed to make do on a lot less things, especially. Here in America, you don't have to drive a couple of miles on any major road, and there's a public storage facility.
Yeah.
And a lot of stuff that's in there is people who are living in 4,000 or 5,000 square foot homes, but still need that place to store extra stuff. We have too much stuff. So one of the first things I always tell people is see where you can live comfortably, but yet maybe with not all the excesses, because one of the things that's going to happen here is, and especially here in the US, more and more people are getting in the wagon. They're seeking the government in some way to help them. And those of us that are still working for a living, I hate to use the word working stiffs, we're still pulling that wagon, but it's becoming harder to pull, and the government's demeaning us as pullers. They're not supporting us. They're making life even more difficult, to where other people are going to say, well, I might as well get in the wagon too. So the first order of business is to get your own house in order. And the way to do that is to make sure your cash flow is efficient and all that. Once you have that done, I would say that, and I've always say this, and it's not because I think metal prices are going higher. You own gold and hope it doesn't go up. And when you sit with people that aren't like you and I, very involved in the gold market, they look at you and go, Mr. Grandich, why do you want me to buy something that's not going to go up? I say, because if it does, what you own most of is going down. You have car insurance, you have home insurance, you have health insurance, but you don't have any investment insurance. And so always, I think, for prudency, gold and silver are worthy assets to own as insurance. And then for capital appreciation, I believe those markets are still better suited for capital appreciation opportunities than the general equity market.
Yeah, agreed. And I wouldn't love to see the circumstances where gold would touch $4,000. Definitely.
Yeah, 5-10 years from now, okay. Next year,
no. I mean sharp rise.
There's something very wrong if I always see, there still are people out there, what's left of the hard asset community that used to exist when I was on the speaking tour and all, and they still throw out the 5 or 10,000. And I always say, no, because even if you have it, life, what you grew accustomed to, you won't be able to live it, even though your gold is worth $5,000 or $10,000.
Exactly, Peter. Yes, Peter. Let's touch on my favorite commodity, and that is uranium. And I believe that is one of your favorite also. But before we do that, can you explain to our audience what is the investment philosophy for Peter Grandich?
Well, I've always been a risk taker. From the time I lost that money in the penny stock to today. I've always rooted for the underdog. I don't like favorites. I root for teams that look like they don't have a chance, so to speak. So I've always been a speculator. And I must tell you, the word speculation was created by Wall Street so they don't have to call it what it really is, and that's gambling.
Exactly.
So gambling. And so when you gamble, you're supposed to be prepared mentally and financially to lose part of all your capital. And that's why I've always fancied the junior resource market, or emerging companies versus, trying to buy is a good time to own Apple or something of that nature. And with that, you have experiences. I've made and lost millions of dollars, not once, but twice. But if you listen to some of the people in that industry, you think they never lose. And unfortunately, it gives a false security to people. It's a much tougher game than you're led to believe. But I'm clearly a risk taker.
Okay, yeah, agreed 100%. Peter, how much of your portfolio is actually uranium? In terms of percentage, how much of your portfolio is uranium?
Oh, okay. So can I take a step back and tell you how I got into uranium?
Of course, yes, please.
That would help. As much as I was around metals, I was never involved in uranium in any major way, both as a money manager and when I worked as a consultant to public companies. However, in 2020, just before the onset of the pandemic, I was listening to someone on the internet, and they spoke about uranium, and they were talking about it being under 20, and a stock that I always thought was a household name if you were involved in uranium, Cameco, was under 10. Why is that? That last time I remember, uranium was 60 or 70 and Cameco was 30 or 40.
Yeah,
and that's
I remember that was the time when Cameco was $8 a minute.
Yes. Yeah. So that was what first interested me. Then combining that with, I started to see what I viewed as smart people, smarter than me, talking about this electrification that was coming. Now it's prevalent to a lot of people, but just 3 or 4 years ago, it was not. And I said, well, jeepers, they're going to need nuclear. There's just no way winds and solars is going to do the trick. And that's what got me involved. But I made a decision then for two reasons. One, I was already starting to enter the twilight of my career, and to revamp myself and re-educate myself and get deeply involved, that I would understand juniors and uranium to the point where I could be self-thinking. I just wasn't in a position to. But I also looked and said, my God, there's only a handful of producers. It's not like in any other metal where there's dozens, if not hundreds, of public companies that are finding it, developing it, and producing it. This turns anything that produces or owns the physical is going to go up. And so I focused there, not because I was against juniors or anything, but also there's another thing. And if I can just sidetrack a little, because it would help explain why I still remain bullish on uranium.
Yeah.
The junior resource market itself has changed dramatically from the 10 or 20 years ago. And the key changes have been the participants. Up until about 10 years ago, you still had brokers throughout the world, not just in the US, who made a living by buying and selling stocks and charging a regular commission. That's a dinosaur now. And junior companies would find what we would call resource brokers or gold brokers or whatever. And so if they got them interested in their company, along came their 200 to 500 clients.
Yeah.
That's gone. That way of getting to the end user for a junior company, no matter what kind of metal it's in, is all but gone. Then the regulatory. Here in the US, they made it basically impossible, even if a financial advisor wants to build a book of business on juniors, unless they're on the New York or the major NASDAQ. Third, competition that didn't exist before. And the biggest single one is cryptocurrencies. Make no mistake about it, I'm not a fan of them, but you have to respect that they took part of what might have came into this market, and now there was a big loss in cryptocurrency. That money's gone, went to money heaven. So it's not the same market from 20, 30 years ago. So it's a challenge no matter what market you're in. But here's the positive for uranium that gold and silver doesn't have. Uranium is basically, if it's going to be institutionally invested in, they're going to look at the producers or people that own the physical. They're not going to look at the 5 to 8, 10, $20 million market cap, has some very prospective land, or may already have some decent drill results. And there's such a narrow door for these institutions to go through. And we're just starting to see that now. We're just seeing the Don't Worry, Be Happy crowd on CNBC talking about uranium and talking about, Cameco and the others. So as that really takes off, as they get into another gear, I still think there's another gear to this uranium move. The trickle-down effect will happen. And that's when the juniors that are involved in uranium will really have their day. And so while they're suppressed and caught in this vicious bear market overall, they can separate themselves when the uranium gets to that next level. And to me, that level was getting above $75, which we're basically at now. That was my target when it was 20. People say, how could you have a target of 75 when the price is 20? But I really think once we accelerate through here, and as we start to get to the $85, $90 level, and I do believe uranium will get to be above 100 again, then the juniors will have their day in the sun, in my opinion.
Yeah. What about your portfolio? How much of your portfolio is uranium? And if you're comfortable to talk names you own for uranium companies.
Sure. Well, everything I own, I disclose on my website, on my blog. What my positions are, whether they're a blog sponsor, I own it, or there's a fund that I consult to. I don't manage it, but if I know they own one of these companies, I note it there. So my largest holding and single biggest ownership is Cameco. And it probably makes up somewhere around 20% of my entire resource portfolio.
Nice.
I've called it the bellwether all the way up. I think they have the single best management. I think they're in the driver's seat because of the few producers out there. There's only less than a handful that are in, I think, relatively safe working areas. So I just think that is the first one you want to own. I have some exposure to some of the others. I don't remember the exact percentage. I have one or two juniors, but I only think now will become the time that I will, into 2024, look to add to that because of what I just explained to you. Because they're still very, very cheap relative to what the uranium price has already done. Now, of course, that has created what I can only call as a throw in the towel attitude now that I see among retail investors on junior resource stocks in general, and the uraniums are caught up in that. And but I still think, if you ask me, and I know I'm singing to the choir, I think uranium is going to be able to separate itself from gold and silver, whether or not they don't catch on. I think uranium still has another powerful leg up.
I know that you are bullish on Kraken Energy, uranium junior company. What do you like about that stock?
Well, I liked the original people involved in it. I was actually one of the first that participated in all the financings, including up to $1 financing, and now stock's like 20 cents. There was a change at the top. They've had some, I guess, delays in getting permits and so forth and so on. But I think they're going to fall into the category that a lot of others that have prospective projects are going to be able to drill them, but haven't yet caught fire because of what we just explained. It's still been a narrow focus on this uranium move.
Yeah. And what's your take on future producers? They are now developers like NextGen, Denison Mines, and Fission.
Yeah, I think you own Cameco, and then you own those as well. I can't imagine, if you run halfway well, that as a producer you won't make money now in the next 12 to 24 months, because, like I said, I really think uranium prices will be over 100. If Cameco, if the world wasn't kind of protecting itself and we were in globalization still, I would have said Cameco was a clear takeover target by a major energy company. But I don't think they can be, because I think Canada would kick up and we'd be very concerned that they would be losing their independence, so to speak. But I do think there'll be a lower level mergers. I think you will see some of the prospective ones that are on the verge of showing that they have viable. There'll be a merger with them, because there's going to be just a marked improvement in mergers and acquisitions in the metals and mining, first out of necessity, because so many are struggling and they're going to need to come together and to survive. And then I just think majors, more in gold and silver and copper than obviously uranium, are going to be on the acquisition trail, because it's so much cheaper to buy something existing that's selling for $10 or $15 in the ground for gold deposit than a major going out and trying to start prospecting and finding a new project at the end of the day may cost them $100 an ounce. Yeah, so I think in 2024, we'll see a dramatic increase, first out of necessity and then out of, opportunity.
Yeah. Is there any uranium CEO that you respect the most, that beside Cameco, you said?
I don't know the others well enough, but I've watched this management team, and if you think about what they did to preserve themselves during the decline and how they carried themselves and what their visions were and what they saw, I would only wish that management companies of all resource companies had the same skills and that they have demonstrated here. I think they've been I don't know of a better management team that ran a company that I've ever been invested in.
Okay. You said you will allocate your cash in juniors, not now, but probably next year. But what are you buying right now? What stocks are you buying? Where are you allocating your cash at the moment?
So I own a few select companies, one in particular that I own the largest, more money in it than I ever managed that I would ever have in my life, and I got it in this one company. It's called Arizona Metals. It's a copper gold play. I like to maybe tell you that a couple of things that I think that are important, and I'll be glad to then answer if you want more individual stocks. But yes, I don't do these things to come in as much as there's a handful of people on chat forums that claim I do. I don't come here to tout my book. But I will tell you something that's very, very important, no matter whether it's uranium or anything else. Where a company is now is paramount. That wasn't the case 20 or 30 years ago. If you and I were back 20 or 30 years ago sitting at one of the major mining conferences and there was a globe there, we could have spun it, pointed our finger without looking and say, yeah, we can go look there. Not anymore. In fact, for myself, I've restricted myself basically to North America, Canada, and the US. We're just witnessing again here in Panama, another bad situation where companies have to think twice now, putting hundreds of millions, if not billion or more into CapEx, only to have some country kind of say, it's do it our way or the highway. So I think that's a very, very important criteria now, and certainly one that that I adhere to. I also have concluded that I'm never going to be the smartest or nearest smartest guy in any field, but at this point in time in my life, it's much more better for me and my family and for people that still believe in me to identify people who are, you want to try to ride their coattails. And there's a man that's come on to the resource world here in North America that I have not only tried to attach my investing dollars to, but I find his personal self and what he stands for and what he lives for very, very rewarding. His name is Michael Gentili. He probably owns 20 now investments, sits on about 5 or 6 boards. And his largest personal holding is this company, Arizona Metals. And I think it's important to identify people. 80% of money managers, according to Nobel laureate studies in the US, underperform an index fund. Think about that. You'd be better off 8 out of 10 times putting your money in an index fund than giving it to a certain money manager. Would we take that if we had a doctor or need a lawyer and risk 8 out of 10 not being as good as something else? So I think it's real important for me to have identified someone. So I almost restrict my own personal investments now into some of the things, not everything that Michael Gentili does, but certainly have an interest in anything that he's doing.
Mm-hmm, mm-hmm. Okay, Peter, I want to hear your opinion on copper, both short-term and long-term.
Well, it's very, singing to the choir, uranium is the closest thing to a sure thing. There's no sure things because there's always something that can happen. But for uranium, the only 2 things that could happen that I can imagine is a terrible nuclear accident again that petrifies everybody, or the world truly implodes. And we're back living in stones and burning wood for fire. Outside of that, it's very hard not to see how uranium doesn't still do well because of the outright increase in demand for electricity and the inability for other sources to deliver the total needs. And so nuclear has to be part of it. After that, copper becomes a very, very interesting, because if you believe where governments are clearly heading. Now, I don't know if the public yet has bought into everything the governments have. The governments have committed basically in the Western world to this electrification. I think consumers are second guessing it at this point in time. But irregardless whether it gets full force, as they said, or only half of what they think it is, there's going to be a tremendous near increase for electrification and delivering electricity. And to this day, until somebody invents something else, copper is the key part of that. And different than in past cycles, because normally you would say, oh my God, the economy's slowing down, sell copper, it always goes down. But that was when there was ample reserve supply. That is not the case anymore. And that's another big thing. I hate to sidetrack thing again, but we basically spent almost 15 years, at least a dozen, where the mining industry in general, worldwide, has greatly lessened money towards exploring for new resource in all different metals. And to the point where so many of them now don't have the supply needed to meet what seems to be where forecasters are predicting their needs are. And this is not something that you turn on a dime. You don't just suddenly throw a bunch of money in, put it in the ground tomorrow, and next week bring out the metal and all. That is one of the other reasons, if I may, on the uranium cycle, that people have to understand that as good as a junior may be, will they be able to get that into production still while this cycle is strong? You know, because Some places now it could take 10 or 12 years for permitting and all in some places for all types of different things other than just nuclear energy. So I think copper, after you own uranium, is worthy. And I think what you're going to see is, why should a major, when they're seeing all these troubles in the world, why should they say to themselves, let's throw $1 billion into XYZ, something in South America or someplace, and say, for $3.50 copper, we're going to need copper well above $5 and for a long period of time before that comes in. And that's where governments have made a big mistake. When they went into all this electrification, they didn't think about, care about, or listen to if people were telling them, hey, if you want to do all this, you're going to need the metal to go along with all this, what you're trying to achieve for, clean air and all that kind of stuff. And so there's going to be a point where metal prices will have to be at a certain level if you're going to get people to commit large sums of money to look for it. And copper is one of those. So I really think I probably look at a copper, and if it has copper and gold in it, so much the better.
Yeah, good point. What about silver, Peter?
Well, I used to get in trouble at the shows because the silver bugs would get mad when I say that silver is only the kissing cousin to gold, or something like that, I would say. And I would want to own more gold than silver. And then I would explain the reason why. These are the people in the audience. Retail always likes to own quantity over quality. If they have $1,000, they rather buy 10,000 shares of a dollar stock, 10,000 or 1,000 shares of a $10 stock.
Same thing with true. Yeah.
But the fundamentals for silver now, the usage of it has improved tremendously. And therefore, I don't have a problem if somebody says to me, look, I want to distribute equally between gold and silver. I think now it justifies itself to be in the same ballpark and sit on the same side of the stadium with gold.
And what about commodities that you are bearish on? Can you name 3 commodities that you are currently bearish?
I can't think of anything because we've let ourselves, one of the lessons we learned from the pandemic was that globalization was a farce. It short-term rewarded us, but left us very vulnerable. We just saw, as you and I were talking today here Friday, there's just an article reaching how China is continuing to corner the critical minerals market. I would just say the only excess commodity we have is too many politicians. If you could find a way to dramatically drop them, I may invest them again. But and let me make that point to you. This is a very important that maybe people outside the U.S. don't realize, but this is important to take into how you consider things here in the U.S.
Yeah.
We now have 2 parties, because remember, unlike other countries where there may be 15 different parties that make up coalitions to run governments, we're still a 2-party system here in the U.S., Republicans and Democrats. Well, not only do they absolutely hate their guts and don't want to be in the same room with each other, now there's factions in each party that hate others in that party. And this is the group that's going to be called upon to fix all the problems you and I can discuss now through Tuesday and not even cover most of them. So politics and the political system is probably the most vulnerable thing here in the U.S. And remember, they got to get together and, the joke of jokes, fix the debt ceiling again. Why have a ceiling? Why do we even keep having a debt ceiling? You guys go through it every time. And now it's completely out of control. It's still unimaginable to me, 100% candid and emotional when I say it, that we have multi-trillion-dollar deficits. You and I are in business. We're required by law in the U.S. to fund our unfunded liabilities. If I owe employees or other people, I have to set aside money. The United States operates as if the printing press can run forever. And that's one of the problems now for Treasury bonds. The reason you're not seeing the rallies into bonds when we've had troubles that you used to see is because the world's recognizing that the United States may start to have real difficulty servicing its debt. And they're going to want a higher rate, regardless whether there's no inflation or not, in order to take that risk. That's why I don't believe interest rates have bottomed yet. even though whether the economy gets softer or into a recession, because people around the world are no longer confident in the manner that they used to be in the United States.
Yeah, Peter, before I let you go, I have two more questions, and that is stock relating. How are you picking your shares to buy? What are the most important metrics that you pay most attention on when doing a due diligence on one stock?
In juniors,
Yes, for example,
management
juniors.
management is always key, because it's usually a perpetual fundraising while the life of the junior, trying to get to the point where it's one of the two out of 10 that actually find the mine and develop it. Grade, because of cost and location.
Mm-hmm.
I think those are three criteria that I feel that has to pass. Now, of course, I'm already, in my view, as I told you earlier, I got the management part checked off, because if Michael Gentile thinks it's good enough, I think it's good enough. But it still needs to meet grade and location. Now, he has some investments that are outside of North America. The only one that I went to, and I was a little prejudiced in it because I was married there, although I'm not Irish, but there's a very interesting zinc project in Ireland that's happening. Michael invested and I invested in with him. But I think those are the three things that you need to have on your checklist before you invest in a junior.
And what are your typical red flags when doing a due diligence on some company? What keeps you away from buying?
Well, this may PO some of the people that still exist in the newsletter business and all, but there are certain people that, when I was very involved day to day in this, they are involved in these companies and they don't have full disclosure. And I'm always concerned about how certain people even claiming, oh, I don't get paid by the company, but yet you find out that they participated in private placements. They don't disclose it. Mm-hmm. They have the companies buy a bunch of subscriptions to their newsletter in exchange, so there are internal red flags, but I think the other red flag is experience is extremely valuable. No disrespect, but I think I would, if everything was equal in a company, everything else, and you showed me there's two potential CEOs, some young man or woman that just graduated college brilliantly, but had great grades, or some old veteran that's kicked around the world 35 years, done everything from driving the truck to running the company. Experience is so valuable, incredibly valuable. And so that would be a red flag if I didn't see that there was worthy enough working experience.
It's a very good answer. Final one. What is your exit strategy? What gains are you targeting, and what are the time frames of your investments?
My exit strategy is to lead this earth in the right direction. Okay. I mean that sincerely. We could talk off air, but my faith is far more important to me than my investment portfolio. Of course. But my exit strategy now is that I'm still a risk taker, but I'm getting to an age where if we get out of this bear market, which I think we will, I think 2024 will bail us out. As hard as it will be now for the next few weeks, the next 12 to 24 months will be very good for it. But I think there comes a time when safety of principle becomes paramount, and I need to focus on that. But I don't think I have to worry too much from here. Doesn't mean in these next few weeks before the year ends that some junior that's already down 80% could be down 90%. But when they turn, they're going to turn so fast and so parabolically like that. At that point in time, if please God that happens, I'll probably rethink some of my exposure. But it'd be hard for me not to have it. You could say to me, Pete, you could buy utility stocks. And part of what we do this for is personal enjoyment. And then every human being, whether it's 1% or 99% of them, is a gambler. Some part of them, for me, it's more than usual. And this is the area to do it in. You're not going to make 20 or 50 time gains on buying well-known technology stocks or consumer-oriented staple companies. So if you're gonna if you're going to gamble, gamble at the right racetrack, and that racetrack is the junior resource market.
Agreed 100%. Okay, that was Peter Grandich. Peter, thank you very much for coming to my show. It was a great chat, and I hope we will do this again soon. Thank you very much, Peter.
Thank you.